Everyone's doing well today. This is Josh Elbow. In the video today, going to be going over the swing trade that I lost money on for ITCI on 10/4/19, held it for 10 days. Going over the technical analysis, I realized looking back at it, it wasn't a bad trade. It was oversold, back to over, it was oversold to over, they had a good pattern of oversold and then up to overbought or halfway. Oversold, overbought, oversold, overbought, oversold, and then profitable. So it has this actually, I might have to come back to this one in the future because it's about at that same oversold point again. Even though on the 180 day it's got a long-term downtrend. But I had bought in on 10/4 at, what was my price? I bought at 801, which is about here. And I realized that the challenge that I had is I think I bought too many shares because if I would have held from the 801 to the, what's this? This is a 26% return and it's looking at 10/14. Hit the oversold, hit the confirmation, sell out at overbought. So it would have been a good trade, and it was a good trade. I just had to get out early. So the main takeaway I'm going to get from this is if I would have bought half the amount of shares, I would have only been down half as much. What's the total? I don't know what the total dollar amount is. Let's do equals this times this 1602. So a 26% return on that would have been the 250. My target profit is the $200 mark, but my sellout, I'm confused. No, I made money on this. I don't know why, because it didn't even go down to 7, whatever. I don't know why it says negative 72. Oh, because I sold out 765 I sold out. When it bumped right here, which was literally the bottom. So if I would only bought half that amount of shares, I still would have been up my dollar amount. I think the thing I was looking at, I was put somewhere in here, so we were already here. Figured it could go down as low as that, but the target was there. If we zoom out, it had more upward potential than downward potential, even anywhere you look on this chart, even if you just go from here. So the main thing was, yeah, just I bought too many shares of it. If I had only bought half this amount of shares, one, my risk would have been in half. So instead of spending, what was it like? I spent like 1,600. I could only spend 800. Still would have had a 26% return on that, which would have been the two. So I could have cut my risk down by half the dollar amount, by 50%, and I still could have stayed profitable. And I wouldn't have got kicked out of the trade on my stop loss. And I have a hard stop in place, but I had the mental stop, and that was literally the bottom that got kicked out at, right here. So the takeaway would be, based on, yes, you still want to cover your downside, but if it's got a bunch of upside, like it's got a huge amount of upside, let's see, from here to here, because it only went about halfway. From here to here is 35, 40%, 37% upside, if not 40. So there's your potential. There's your upside versus your downside. Downside still could have gone down 10, 15% on that 800. That's still only 80. So I should literally, my position size was way too big on this. I should have only bought 100 shares. Got in at $810. $810? Yeah, I think. I can't do math right now. Yeah, $801. Still could have had the same exact stop loss, but if I would have got out at, instead of 915, got out at maybe like a 9.8 or a 9.5 mark. Had good price action all the way up. Stayed above the SMA line. So this could have been a way better trade. So I guess the big thing was know your position size in accordance to the volatility that the market was showing in that pattern. There's my take. Hope this is helpful. It could have been a good trade. So all in all, it was a good trade. The biggest thing I learned from this is position size. Hope it was helpful. Hope you learned something from it too. Thanks for watching. I'll see everyone in the next video.